All right, welcome everyone to another session of charting, right? Charting class is all designed to kind of get you up to speed on what the next challenges are there and what's in my radar today. I'm going to use Apple as a perfect example of that. And let me be a little frank here. With all-time highs all over the place with a lot of these tickers, it's very important for you to understand the fundamentals. I don't care what strategy you have and everything else. The strategy is the strategy, and you have to understand the fundamentals of that strategy. Do not deviate. Stay along your plans, and you should be fine. If it doesn't show you an opportunity, don't worry about what Joe Schmo was doing. I promise you, so what I wanted to point out with Apple is that Apple just slowly, especially after the whole entire Tim Cook announcement, there was a lot of questions that was going to be placed on that one. But there's a very large impact that just recently happened today. So we had a nice little drop off that happened, and then we recovered relatively well. So you'll see that I have my trading plan right here on the screen. I'm looking for Apple to hold 293. If that can hold 293, then we can get ourselves a nice little push to the upside. We might even get to see Apple at $300, which is going to be very interesting. A lot of people don't know Apple is actually one of the tickers that came off of a split, and that was back here. They did 4-1, and that was roughly about $100. So it was like $400, $500 at that time, and now it's back to being close to $400 again. So what do we take with this information? A lot that you kind of have to look at, right? One, this kind of looks like a W pattern. So let's just take that in that regard. If this was a W pattern, I always teach everyone, you want to take the short side of it, and we can see there's our center pivot right here. This side is kind of shorter than this one, and we just go ahead and nice little extension from here, right? We'll put that right at the breakout, which would have been right here. And 50% of that move would have been, switch this up a little bit, would have been somewhere around, oh, come on, click in. There we go. There we go. Right. Would have been somewhere around that 298 level. So I'm very, very, very curious for Apple on what it's going to do in the near future. Because if it can actually get to that 298 or whatever the case may be, we probably could get ourselves a nice little push past that. But look for profit ticket to happen around that 298. So we got like $6 more of a movement on this ticker itself. That's just how the W patterns work. Let's look at it from another set of eyes, because I do this with my classes a lot. You want to have confluence. Oh, it kind of looks like a W. All right, cool. Let's see what happens. What's the levels for a W if the rest of the market is doing so? All right. So now we got ourselves an uptrend. We just made a higher high. So that means we got ourselves a little bit of a pivot. Let's go ahead and draw this line. So we got a nice little trend right here. And then here's our base right about right here. But we also do deviations. So we kind of do, actually, this one will be better right here. So we got ourselves a nice little deviation of that, which would be, this is our pivot, and they deviated to here. So there could be a nice little retest to this area here, and then we could go ahead and push, right? So that's just a trend line deviation. Oh, actually, hold on. They got dividends coming out. Let's see what they normally do around dividends time. Let's get rid of this, get rid of this. If we look at this price action here, we had a nice little run up into dividends, and after dividends, there was a drop. Okay, let's see. Nice little run. Dividends, not much of a drop, but a nice little curl down. So that could be another case there. Nice little run. Oh, nice little pop right before dividends. But after dividends, we got a little curl over drop. And so it seems like 3 out of 4, there's some type of drop. Drop at earnings, push up, and then right after dividends, this are dividends, barely broke the top, and then a drop. All right, so that's 3 out of 4. Nice little push up, even more of a pop. So about 3 out of 5. It tends to kind of pull back a little after dividends. So since dividends is coming up, and that was our ex-dividend date was today, actually. Let's take that back, right? There could be a little bit more of a pullback here, but I would say mark that level at 293. There's a strong possibility we're going to go ahead and get a nice little push to that upside when that happens. Let's use a 513 EMA. Let's see what's going on with the EMAs. Does the EMAs give us some type of, oh, look at that. Let's go ahead and get rid of this. So this is a 5 EMA. If it reverts back to its means and we stay away from it on tomorrow, there's going to be at least a retest back over to 288 at some point. Maybe the momentum brings us back to 280. Maybe the momentum brings us back to 280, 267. We don't know. That's not our guessing game, but we can write some rules just on the back of the EMA. And if you don't believe me, let's take another run up. So we had a nice little run up here. This detached from the 5 EMA. 1, 2, 3, 4. That is one. That's actually 5. 1, 2, 3, 4, 5 candles. Not even the wick touched the 5 EMA. And what did they do? Came down here, even touched the 13 EMA. So there's a strong possibility that this can happen. We give it another test. 1, 2. Okay, they bounced off of it. 1, 2, and came right back to it. So we could get ourselves a nice little mean reversion. This is 4, just off of this move here. Now, how many candles is it so far? 1, 2, and 3. All right, so that's just the EMAs. Let's go ahead and take the EMAs up. Let's do Keltner channel. All right. Oh, we're above the Keltner channel. Could this momentum bring us all the way back to the center of the Keltner channel? Very possible. Where's our 200 moving average? Just to kind of get a little sense. Our 200 moving average is all the way down here. Can they have the momentum that brings us all the way down here? Again, folks, I'm not trying to change your strategy, and I'm not trying to tell you what to do. I just want to go ahead and give you all types of variations on what other traders are probably thinking, because you want to be in line with the majority, not the minority. Well, if you could be with the minority before the majority shifts and capitulate, maybe you could go ahead and get some good profits. But the safer, the easier trades are when you're with the market. Let's bring in the stochastic. Oh, look at that stochastic. It's all the way above here. There's a nice possibility we could get ourselves a nice little cross. Let's go ahead and add some confluences just on a stochastic in the EMAs. 513 cross, separated from the EMA, 1, 2, 3, 4, and then the fourth one dropped down. What did the stochastic do at the peak, which would be this candle right here? Let's bring that in. Oh, it was above here. And then reset it all the way down to this level. All right, let's get rid of this again. Let's go ahead and, let's try it from the downside. So we, 1, 2, so 2 candles right here was away from the 5 EMA. Put that there. What was the stochastic doing? Oh, it was pointing down, but it was at its base. Look at, we're very close to this area here. So we try to cross right back up. Can y'all see the confluence? Again, everybody has their own thesis. Everybody has their own strategy. I don't want you to go ahead and be like, well, Jeff, I just saw the Stoch RSI, and I think that I want to add that to my confluence. Great. Study it, backtest it, use it, bring it back so that we can make sure you understand how it operates, because the market's only going to respond based on the parameters that it has a pattern to, and you just can't guess the pattern. It's best to test the pattern. All right. I'm going to repeat it again. It's better to, it's not it's not just good enough to take the best pattern or find the best pattern, but it's good for you to go ahead and test the pattern. That way you can make the best trade. All right. I'm really over you. I know. Thank you for the hug. I appreciate you. Can I finish?
Is that me, Rod?
Rod is not in here.
Oh. If anybody sees Rod, I want to say thank you.
All right. Goodbye. And you can see Rod is the fan favorite. All right, let's go ahead and take this same exercise. I'd like to put this in different perspectives because I don't want y'all to just think like, oh, well, Jeffrey, of course all this works. You already know the chart. I always do a little bit of a replay so we can get a little bit of a sense so that way we can make sure we understand exactly how the market can move. And all I want you to do is run the fundamentals. Nothing more, nothing less. All right. So let's go ahead and pick a ticker. Let me grab a watch list. Which one should I pick? Let's try T-Mobile. Let's do T-Mobile. Just for giggles. Let's go ahead and erase all of 2025. Switch over to T-Mobile. Get rid of these drawings. can always put them back. Let's do, you know what, for fun and use some extended hours. I want to do some pre-market highs and lows. I'm going to go with 2-hour chart today. Let's do something a little bit different than what we normally do. Okay. If you don't know, a good strategy in some cases, I know a lot of people do it with IV flushes and everything else, is using the pre-market highs and lows. And I know you probably use it in some of the smaller time frames. I don't want to take anything away from that. But I just want to put everything in perspective. Hey, good morning or good evening, wherever you are. I don't know if you're international or not. Oh, Cicely, how you doing? All right, so I guess it's good evening. All right, so let's go ahead. Hello. So let's go ahead and get a sense of it, right? Make sure we understand where we're going with it, right? IV flushes are great with pre-market highs and lows. We could go with a smaller time frame, but for the sake of time, I'm gonna go ahead and stick with the 2-hour. All right. So let's go ahead and grab that. All right. So quite a few interesting spots I see so far. Yesterday we did psychological levels. So mentally, if y'all want to go ahead and keep a mind on that, 225s and 230 looks like it's another one. And then 240, we flew right through the 240 here, but roughly around 240 has been a tough area. Is this their all-time highs? Okay, so we don't have a lot of information on the 240 because it looked like at this point we just made all-time highs somewhere around that 248. So maybe every 5. So just keep that in mind. Not saying that you have to follow that rule. Let me take pinky off so I don't get distracted and market dominance just for now, right? So the first thing, actually, you know what? Just to make this even more entertaining, because I'm not, just to make sure y'all keep up. I was going to take the pre-market highs and lows. I mean, pre-market backgrounds off, but we're going to leave it there. So first thing I want to go ahead and do is do the pre-market high and low. So at this point, we got ourselves our high. We got our low. And since this is just a very tiny candle, we're just going to go ahead and take the lowest point here. And that's this right there. Yes, over here in this little candle right here is actually a level, right? Because that candle actually executed an order that's sitting there. So if you ever see these flats, still kind of consider it if it's its lowest point. Of course, this is post-market there, right? So we got our levels, high and low for the previous day, right? Or for the current day, right? And then the first thing I want to kind of look at is that psychological level. I really want to see what happens when we get there. So I'm going to go ahead and mark this off. And I'm not going to do the exercise that we did yesterday. If you want to watch that video from yesterday, I can really break down what that is there. And then the other one is 220, just because it is up close to our current price action. So let's see what that price action does with those two levels, all right? And then what else we see? We do see that we're kind of in a little bit of a block here, and it is a bit of a fair value gap. If you haven't seen any videos on fair value gaps, I do suggest you check that out because these are very, very cool. It just basically shows the action of imbalance, right? Oh, and that level sits right at the center of the fair value gap. Look at that. So that little bit of confluence right there. I won't be surprised there'll be a strong reaction there, especially that we rejected over here. And what else do we have? We got a low that's at this level here. So this is probably going to be very interesting to see. If we get around that 216, we're probably going to get a very violent bounce somewhere around there because we did bounce from this level. And they're going to probably try to test it, if anything. Let's get rid of this so we can get a clean chart. Let's put in one candle and see what happens. All right. Looks very solid. You know, we kind of extended down a little bit as they're trying to see if they can hold that. Let's see what the next one has. All right. Yeah. Okay. And this is, again, I know it sounds like I know what the charts are going to do. And it feels like I probably already studied this chart. Promise you, I don't trade T-Mobile like this. I think I've only taken one trend ever. And that's from the beginning, only because I used to work with some of the companies that worked with it, right? And look at that 220 level. Wow. That was a great response. So if you had a very close entry, you would have to deal with just a bit of drawdown, probably about 46 cents just for it to kind of bounce up. And then we're probably going to go ahead and get another candle that probably follow through. Now, it's not guaranteed, right? Because we are a bit on a downtrend, and this could be just a bear flag to a certain extent. But what if it's a W, right? What if this starts to really double bottom this? We're already double bottom at this level, especially showing us a strong pivot. Let's see what the next candle has for us. Next candle. All right, so they attempted, and this is why having your stop loss here, it would be smart, right? I am believing that this level is going to give me a bounce. And I am believing that it's going to go ahead and take out maybe this high here. And you could see it barely touched that. So that means there's a lot of sellers that's sitting right here, fundamentally speaking. And right now, not only is the current trend giving us lower lows, now we're probably going to go ahead and test this area here if the momentum's there. So still no trade, right? There's nothing there. If you want to be risky, you can probably play a short here and wait for a rejection to give you some extra confirmation as a break, retest, drop. It's now 12 o'clock going to 2 o'clock because that's for the completion of this candle. So it's going to be kind of tough to hold it for 2 hours and then an overnight. Maybe an overnight would be great, but that's going to be a little risky, especially that we were looking at this bounce area. So let's see what happens. Next candle comes in. Especially with that now that I think about it, with that pre-market low, that probably was the original play. Probably the reversal to here was a bad idea, but you can kind of see pre-market break, retest, and then break to the down. And then this is probably profit taking, giving us that bounce. But still, we closed below this level. Don't see any trade so far. And that's okay. Maybe you don't take a trade today. Maybe you take a trade another day. Or maybe you don't take a trade in T-Mobile. You find another ticker that actually gives you a trade. Just watch it and let it cook. All right, next candle. All right, so that's the post-market. Can't do nothing about that. That's the pre-market. Can't do much about that. They probably had some news. Very strong move all the way back up into the downside. So what do we have so far? Now we got this current day's pre-market low, pre-market high, and we're going to go ahead and see if we can get ourselves a nice assessment. It looks like we went ahead and just came back up here, probably filled some type of gap or whatever, and then came back and closed below. A very strong confluence to play to the downside. Why? Because the pre-market low from before, we already closed below here, and this probably was just a bit of a bull trap. So, I'm sorry, bear trap, so they could trap the bulls and spring it down to these levels, maybe here, or use their liquidity to bring them down to here. Let's see if that actually happens. Next candle comes in. All right. They are playing some games. This is now 12 o'clock. Next candle. All right. Still no real trade. I don't see anything because, again, we've proven that this is a very tough area. I don't have any fair value gaps to fill. If we were closer to here, maybe. If I had some confidence and some time, maybe we could get up into here. Maybe they're putting in a double bottom and building a new base. Maybe. But right now, since it's now 2 o'clock, right? 12 to 2. So we're going to give it one more candle because 2 to 4, I don't think I want to carry that. Oh, look at that. They just keep on toying with this level. We're going to leave that alone. Again, we've just been playing inside of this range. Next candle. Post-market. Post-market again. Pre-market. Oh, I guess they really wanted that level, right? Could have played it to the downside, especially with the second time breaking. Again, whatever your strategy is going to be very important here. All right. So this is 4 to 6. This is 6 to 8. All right. So we got our pre-market highs and lows. Oh, what a nice little break. Depending on your strategy, you probably could go ahead and play this down. Now, I would love a nice little retest. And, oh, actually, let me take it a step back. Remember I said the psychological levels in the $5? Look at how this is reacting. Again, I don't know this chart. I was just guessing that. Here's our 215. Here's our 210. I won't be surprised we get a bounce on 210, especially 8 to 9. Let's see what happens. Next candle comes in. Not the bounce I was looking for, but you can see nice little sweep of liquidity here, and then we could get ourselves a nice little pop. Let's see if we can get into here and play this as a trade, seeing if the momentum is going to be on our side for the fair value gap. Next candle comes in. All right. Riskier trade, we're going to go very light. Like I said, 100 shares will give us one contract close to the money. All right. So we're anticipating that the 210 level is not going to fail. It can. We did get close to this wick, so this could have been a break, retest. This does look like a very oddly janky head and shoulder. We are in a downtrend. Very risky trade overall, but following the rules, following opportunity, probably being a little bit too bullish in our bias. Probably could have been in since the break of the pre-market high and low from before. There's a lot of speculation in that regard, but let's follow the plan. So let's just say we took an entry to here. Our stop loss will be about $274. Our TP will be probably just going back and sweep the liquidity. Maybe we could go ahead and flirt with that next fair value gap, giving us a strong 2-to-1 ratio, maybe a little bit above it. And right now we are at 12 to 2. So we got 2 hours to see if this is going to work. And then we have to make a decision. Are we going to swing it overnight? This is a Monday. So you probably could do like a Friday contract or the 2 weeks out contract, just to kind of give you some time and some buffer. And then your strike would be somewhere closer to 220, maybe 215, maybe even 212 if you can afford it. But it's exercise. Let's go ahead and see what happens. All right, let's see. All right, we got a nice little close. As if we're going to go ahead and get inside of that fair value gap, right? If we have multiple contracts, this is where you might want to shave off the contract, if anything, because we're attacking a fair value gap. They may attack it overnight and then dump the next day. That's very possible. Or they might just pop it all the way up. Let's look at the stochastic and see what happens so we can make a decision. Stochastic is giving us a nice little cross to the upside. We're getting bullish divergence type of action here, but there's no confirmation for the bullish divergence. Shout out to those that understand bullish divergence. If you don't know, that's okay. That's what classes are for, right? Whoa, man, we were way detached from the 5 EMA, so we got to at least retest back to the revert back to the means. So that's 1, 2, and 3. So as we go ahead and test that, and then the KC, what's going on? Oh, we are far away from that. Maybe we could play it back to the KC. Oh, look at that take profit. It's very close to the KC. Let's see what happens. All right, we're going to carry it overnight. That means we have no stop loss and we have no take profit because there's nothing we can do about it. Next candle. Very weak, but that's okay. Just stay up. That's all I'm asking for. Do not reject that fair value gap. Post-market or pre-market. All right, nothing crazy. Oh, all right, that is 8 o'clock. That closed at 10 o'clock. We're at $353 right now. So let's go ahead and put our stop loss back on the screen. It will be something like that. And then our TP, what did we say it was? Somewhere around this level over here. I take that back. Somewhere around this level over here. Testing for that fair value gap over there. Let's see. Do we get it on this one? Fill the fair value gap. Oh, man, it would have been great if we put your target right at the fair value gap. And listen, let me give y'all a little bit of some insight. If your general thesis was to play the fair value gap and it ended here, put it at the edge inside of the fair value gap, it's okay to leave a little meat on the bone. If you have a lot of contracts, it is the smartest thing you can do. Because yes, you want to get all of the stuff off of it. You want to leave no money on the table, right? But the probability of them hitting here and reversing before they fill the whole entire thing is very possible. Is it high? Maybe not, because we have been beat down for quite a bit. The center of the channel could have been your target too, and it looks like that was some folks' targets. Let's go ahead and put the EMA just to kind of get a little bit of a sense as well. Get out of my way, right? Oh, we got a cut through on the 13, so this could be just retracement for us to go ahead and continue back up to the upside. That's very possible. But when you have only one contract, you have to ask yourself some questions. Do I put my stop loss into profit? At least I walk away with $51. Because I know I'm chasing for $598. Are you willing to risk $230 to find out? If not, take your money, especially with a cut through after making another cut through. Let's see what happens. Next candle comes in. Oh, they put in so much selling pressure. It's 2 o'clock. Next candle comes in. It's now 4 o'clock. Everybody took their profits. Oh, man. Shoulda, coulda, woulda. So what's there to learn from here? Well, the first thing I want you to learn is that if it's not at least a decent setup, not the question was, right? We could have played this to the downside, especially when we did the pre-market high and low somewhere around this level. If we had EMAs, maybe we would have had some confidence on that one. But just on pure price action, we was looking for breaks. Probably could have played here for a nice little scalp, but then they swept liquidity. It wasn't the best. But in this psychological level was a good continuation for the post-market in itself. So maybe the close before we got into the post-market. Would have been your entry? Oh yeah, because your stop loss would have been somewhere here, and you probably could enjoy this small entire downside. But we already know we are in the midst of a counter trend trade, and you're trying to hold and be the one that reverses the entire market. So yes, you're walking away with $51, and they refilled back inside of the fair value gap. Why? Because when they came to test the fair value gap, it did not have any friends. Shout out to Javi when we were talking about fair value gaps a while back. You can see that the bullish fair value gap trumped the bearish fair value gap, and that bullish fair value gap looks something very similar to this. Let's call it bullish. So as long as it stays above this area, we should have a lot of bullish friends with us. But we did not hold and give us a green candle. It's a red candle right after making a fair value gap. Gives you a high likelihood that they're going to go ahead and test that fair value gap and maybe even fail the fair value gap. And that's exactly what it did. So as I go ahead and hit play so we can see the rest of the price action, you'll see that the market can literally sweep right back and forth at certain key levels. The psychological levels look like they're holding relatively well. Oh, good 513 crossover here. Oh, they just came in, and then you get the, oh man, I knew it was going to go up, and then you got stopped out because you didn't know to let go of the counter trend. Let it build a base, give you good confluence, wait for the retest. And that's the fundamentals that we want to teach you. So that said, let me go ahead and stop the stream. So everyone over at YouTube, I appreciate y'all chiming in. Don't forget to hit the like, subscribe, and the bell button. That way you can know when I'm back on breaking down some of the fundamentals. You have a wonderful morning or evening, wherever.